Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, we're going to talk about a date coming up in the stock market that you need to be aware of. It has major implications. We're going to tell you all about it. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room, we have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob, this date in May, why is it important?
Yeah, that date's May 15th. And May 15th is when the majority of stocks will have reported their earnings and their 10Qs for the first quarter. And you say to yourself, well, why is that important, Bob? It's because this chart I'm going to show you now, we've in the last 2 years, earnings, EPS has been flat to down slightly. Yet the stock market has been absolutely ripping. And people are like, well, why would it be ripping? Because of what you see here on the chart. There's an expectation of 9%, then 12% growth in earnings per share coming out in the next couple quarters. Basically, they're saying that everything was suppressed and now we're starting to get EPS lifting. Now, is that possible? Well, think about it. Remember, earnings aren't normalized for inflation, right? So you're starting to get a lot of inflationary price increases in the system. You're also getting a lot of layoffs, and you're getting a dollop of some technology innovation. And so their view is that price increases, suppressed labor, suppressed, cost of operations, and you're going to get a lift in earnings. Now, is it true or not? I don't know. That's why May 15th is important, because then we're going to know whether or not earnings hit their analyst expectations. And you and I both know, Phil, analyst expectations are always optimistic.
Right.
So if they get anywhere near this, then I think your scenario comes to life is then, you're looking at May 15th, and then you go to, okay, what's the next date is August 15th, right? So that's how you have to kind of look at it. And they're going to readjust on May 15th. The analysts are going to look at that and say, hey, it's coming in at trend, below trend, above trend. And either the market's going to top by May 15th, and if it doesn't, it's going to go to August 15th. So I thought I'd throw that at you, and I want to get your comments before we go to the next chart.
Yeah, no, I think it ties in. I mean, that's a decent catalyst for trying to keep the trend going here higher. And like I said yesterday, structurally speaking, the charts are in a double wave 5 with a nested wave 5 and a larger wave 5, recognizing some Elliott wave theory there on the thing. And those are impulsive waves. So I think this is definitely fuel, even though you can look at the underlying metrics in the market or even in the economy, right? And we're going to go back to that probably next week. We're going to take a revisit like where we are with the unemployment and jobs numbers like that, because this is where it slowly starts to creep up, and you get like we talked about before, these rounded bottoms in those metrics, and that basically starts the clock on when we definitely are going to see a slowdown. Right now, we aren't at the metrics that you need to have for things to stop, but it's coming. It's coming, and that's the trick, and it's all about timing. So I think this particular article, this chart here is excellent find, because I think it kind of goes hand in hand. And you're going to be walking right onto the train tracks as the freight locomotive is coming at you with a full load. It won't be apparent until, we have topped and we are coming down quite sharply.
Yeah, and a couple things too. First of all, I want to hat tip Warren Pease at PIES. This is his chart from his Twitter feed, so I want to make sure he gets credit for it. And check him out. I'd follow him if I were you guys. He's underfollowed, and the guy's a freaking genius. Reason why I was so heavy in energy for all these years is because of this guy. So he's a really good follow. Remember, hey, you don't have to think of this stuff yourself. Smartest people in the world, determine and distill data from other people who are doing well. And I'd encourage you guys to check this person out. The other thing too, Phil, and we didn't put this chart on, or even though we had it, is that we're also at the top. 48% of people are allocating to stocks. This happened right before the last top too. And we also have another chart that we didn't show you. Maybe we'll show you guys Monday, just as an aside, is that we're reaching a point of what they call earnings and value add that only time has exceeded it was at the end of 1928. So we're really pushing ourselves against the wall. This is no longer a surprise rally. Everybody's all in, as Phil says. The pool's warm, but the pool is full. and we're getting to last call. This next chart I want to show you just kind of just shows you why I say that, is that we've not had a 2% correction in the last 100 trading days. I mean, that is literally insane. It's fairly rare, and it just goes to show you that there's a big push now for everybody to try to maximize their gains in the stock market. And to quote the great philosopher of the president of Citicorp before the 2008 crash, he says everybody has to dance until the music stops. And that's part of the problem, Phil, is that, you and I'm macro bearish, and I'm going to be absolutely validated and vindicated, but I have to be allocated. It kind of sucks. You're going to have to wake up one day and say, okay, when do I pull this thing to cash? Because I think, we're going to get hit with a baseball bat when this thing goes. And in 2 to 3 weeks, it's going to wipe out months and months and months of gains. So I just want to show you that we are absolutely, there's no room for error anywhere. I think you have a chart you want to show too, Phil.
Yeah, one more bonus chart here would be the net liquidity. And the reason why I wanted to bring this up is to show you guys that, you're wondering where the fuel's coming from. Well, the Fed was trying to curb the amount of liquidity in the system. Yellen, through her actions, has been actively combating that with the issuance of T-bills. Remember, T-bill issuance right now is absurdly high, way beyond what the normal mandate for T-bills is. And why is that? Because she knows that ultimately that can turn into leveraged collateral in the system by the institutional players. Because remember, it equates to about, they can take those T-bills because it's when you're dealing with short-term treasuries, they treat that like cash. That can be up to 7x leverage in the system. So now you look over here on the right side and you can see this big departure from the relationship of net liquidity. So not only did net liquidity really stop going down, and this really started to take hold when we had the debt ceiling raise last year. She went nuts with the T-bill issuance, and it actually managed to trend liquidity higher. This is a weekly chart. Now, not only do you have that, but you can see how much leverage is in the system over that because we've gotten this big departure, these alligator jaws, right? Another alligator jaw chart. Where have we seen that before? Well, we actually were in that similar situation going into right before COVID. Now, I'll argue that net liquidity wasn't as much of a factor back here as it is now because of what they did with the printing and everything like that. But you guys can see since COVID, the net liquidity really kind of dictated flows in the stock market until we got to this debt ceiling raise. And then all of a sudden, like leverage took over. So what do you guys think is going to happen? Well, we're going to close these alligator jaws. We're at, fair value is almost 1,250 points higher than where we should be in terms of where the net liquidity is in the system. And last time we were at these levels was going into COVID. And as Bob has said repeatedly, when the move happens, it's going to wipe out weeks at a time in a very short, days will take out weeks of work in the stock market on the downside. So this is why you got to be very, very careful. I think this chart gives you a great example of how levered everything is and how, again, this can go on for a while longer. If you go look on the left side of the chart, this went on for months and months, but it is going to come. So you just have to be careful here and not be complacent and just know that when we do start to sell, it will be pretty violent. And it's when you get that on the weekly chart, when you see a big red candle on the weekly chart, which we haven't really seen that recently. If you notice, it's all small candles again, similar to what we saw going into COVID. But when we get that big red weekly candle, you're probably going to see a few more after that. So in simplest terms, that's what you really look for, but it's coming, whether that's next month or June or, what have you. The window's closing and we're on borrowed time, basically.
Yeah, and look, and we have an indicator that we use internally that will tell us when we should be bailing out of any individual stock. So if you guys want that, you can trade with us, tradelikeagenius.com. We'll show it to you, we'll share it with you. You get to use it for any stock that you want, and you won't be surprised. You might argue with it, but you won't be surprised when price action starts going against you. With that, Phil, you guys have a great weekend. We have some great charts for you guys coming up this week. It's becoming a target-rich environment. The world is getting crazy. This thing what happened in Russia yesterday. Don't know what that's all about. Is it a false flag? Did we do it? Did they do it? ISIS is in Syria. Is Russia going to go into Syria? A lot of things happening, guys. It's really a wild world out there, and you just don't know what button's going to get pressed or where the revenge is going to come from. So be careful and be smart out there. Have a good one. Thanks, Phil.
Trade Genius.